I'm a property investor with 9 properties, but I've just recently sold my residential and now my industrial, so I'm down to 7 properties. I'm going to break down for you the profits, the loss and all the expenses. So now let's get into the calculations. I've written all of these things already. I'll be as transparent as I can. Let's get started. First of all, this is the Ubi Industrial property number 3. The purchase price on video I said 500k, but actually it's 506k, which also means that my profit is actually 6k lesser. But anyway, I sold at 575, so immediately you can calculate the capital appreciation already. Now, let's start off with the cost of investment. In order to acquire this property, how much did I have to pay? First of all, the down payment was just 10%. So back then, the 90% was from bank loan. So very good, we just need to come up with 10%. This is the amount. We also had to pay stamp duty, 9788. We had to incorporate company, 750. Okay. Then there was also a corporate secretary services that we have to pay, and then there's a GST registration one-time fee to register the company, and then in order to take a bank loan there was $1,000. This is the total cost of investment, 61k 564.9. So there are actually a lot of costs into this thing, and that's why I think a lot of people say that it's very expensive or you might not even make money. But guess what? There are other expenses also. So when we claim GST, we also have to pay $200 to claim GST because someone is doing the filing for us. There's a yearly company filing. This is separate. And when we actually renew the lease, alright, there was actually a rental commission, $4,005 for this particular unit. It's quite a special number. When we sell it, it was 11k 500. Now, just to let you know, since this unit is actually incorporated with GST, all these things, right, agent rental, agent sale, we don't need to pay GST anymore. Now, the combine all of this, right, of this cost is 19k 505. Alright, so we have cost of investment with other costs. Now, that's not the end. We have other ongoing monthly expenses. Let me just fill up for you. Maintenance fee is $300 per month. Property tax is about 207.5. And mortgage is an interesting part. We had different interest rates because interest rate kept changing. But at the height, I was paying about 1794. After refinance, it became cheaper. So now, how does this all come into play? Very simple. Let's look at the profits first. If you don't understand this part, never mind, I'll come back to it again. But let's look at the profits first. The first profit that we're going to get is cash flow, right? So what is our cash flow? Basically, our cash flow is the rent minus away all these things because we use the rent to pay all these things. However, during COVID, which we were affected by it, there were times where I didn't have a tenant. Then obviously, then nothing will cover this. It's my own money to cover this. So at certain points in time, cash flow was negative, like, negative like $2,000. Right? Sometimes it was negative $33 because the rent was low. Then we changed tenant. Sometimes because of whatever, it became positive $500, etc., etc. So once I look into my bank statement in overall, over the last 4 years of owning the property, my total cash flow with some minuses, with some plus, add up to 10,311.91. Okay, it's just a combination of all these things. Adds up over 4 years to this. Now, come to the second profit, which is principal. My tenant paid the principal for me. Basically, they helped me clear my loan. They paid about $30,000 of principal. And number 3, I enjoyed capital appreciation because I sold at this price. So capital appreciation here is 68k 731. These are all my profits. If I add up all the profits together, it will be 109,043.01. So this is all my profits. Okay. However, I want to know is the net profits. So what's net profits? I take total minus my total expenses. So my total profit is here. Alright, this is my total profit. It gets up here. What is then my total expenses? So look at all these things. What are my total expenses? Very simple. My total expenses are everything here. This is an expense, stamp duty, incorporate company, CorpSec, GST, all these are expenses. And so once we do that, alright, everything add up here together, my net profit would become 77,600.01. Now, I want to ask myself, what is my ROI? How hard has my marketing been working for me? So how do I calculate ROI? I'm going to take my net profits, I'll put it here, and I'm going to divide by the cost of investment. What is the cost of investment here? I'm going to divide by cost of investment because I have accounted for all the expenses already, and this was how much I need to acquire the property. In other words, I spend this money to buy the property, I get this net profit. Once I do that, you can see that it works out to 126.05%. And this was over 4 years. So if I divide it by 4 years, it works out to a very nice 31.51% per year. This is per year. So this property, very good, 31% per year. Once again, I must say, this is actually even better than the property 4 that I have, right? My own residential. But it's really, really outstanding because I haven't seen an instrument that gives so much returns in 1 year. And let me just give you a hint. Why is it so high? Despite all the sometimes negative cash flow, sometimes no tenant, sometimes high interest, and I'm paying this kind of mortgage, a lot of people say, wow, so many costs, how to even make money? There's nothing wrong with the calculation. I'm still really getting 31%. The main reason, okay, is because of leveraging, right? It's because of loan, because the down payment was just 10%. Alright, this behind the scenes calculation, I'm sure a lot of people don't share with you, but this is what I'm going to make in my future videos, so do follow me for more of such things when I buy or sell my properties.